and led to the downside. In deal news, Dexcom says it is not in deal talks. And in other news, Amazon gained 5% ahead of that stock split on June 6th. Wrapping things up, Salesforce reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Doug.
All right, Bill, thank you. To get live audio of breaking news right on the Bloomberg terminal, the function is SQUA, then the green go key. By the way, this business flash was brought to you by Informatica. In the cloud, your data has the power to do the extraordinary. Manage data across any location in the cloud for accurate and actionable insights. More at Informatica.com. I'm Doug Krisner. That is your Bloomberg Business Flash.
All right, Doug, thank you so much. Well, one of the many things I love about our Bloomberg team is when they write about a company that's not a household name, but probably should be on your radar. And this particular startup, for the past 5 years, Tim, it's been backed by some of the biggest names in VC.
I had never heard of it until today, and the reason is because it just exited stealth. Michelle Davis writes about it for Bloomberg News. She's a finance reporter. She joins us on the phone from New York City. We're talking about some huge names here, Michelle. Andreessen Horowitz, Founders Fund, of course, of Peter Thiel, Khosla Ventures. There's some other ones, including General Atlantic, D1 Capital, Lightspeed. The company that we're talking about has been secretly developing a way to sequence genes faster, cheaper, and at a bigger scale. Tell us about this company, Ultima Genomics. Excuse me.
Say that 5 times fast.
No, I'm not going to. I can't even say it once slowly.
So yeah, this is a company, Ultima Genomics, that just came out of stealth mode today. It's raised $600 million from some of those big names in VC that you just mentioned. It's now valued at several $billion. And what they do is, they basically, so, you know, we as humans, we all have a set of genetic instructions. And for the past 20 years, you know, it's cost a lot of money to sequence one person's genome, from, you know, costing billions of dollars in the 90s to, as of last year, you know, around $562. And this company has come up with a way to do that for $100. And what they say is that this kind of sets up what's going to be this new phase in science over the next 10, 20 years that looks like, you know, what we saw in technology and computing over the last 20 years, where, you know, 20 years ago, people had flip phones, and there wasn't very much they could do. And now we all walk around with iPhones that have the same computing power as a computer in our pockets. And so they say, in that same way that, you know, technology saw these changes so quickly, science is going to see that, so that we're going to be able to, once we're able to map people's genomes cheaply and at scale, we'll be able to solve some of these big questions around, you know, why did this person get cancer and this person didn't? Why does this person respond to, you know, a medical treatment in a way that this person doesn't? You know, why does this person get wrinkles, that person doesn't? That sort of thing. And so they, by, you know, coming up with a way to sequence the genome for $100, much cheaper than what it currently exists right now, they say that it's kind of this tipping point of a future where, that seems very kind of sci-fi-esque.
I thought everyone got wrinkles, first of all. I didn't know that some people didn't get wrinkles.
Enter Botox.
Okay.
Not everybody gets wrinkles.
Okay.
No.
Well, that's not genomics.
No.
That's not gene sequencing.
I have to say, you know, Michelle, this is something that I've definitely talked about with Kathy Wood when it comes to gene sequencing.
She's all in on these companies.
Definitely. And I feel like when you talk about innovation, disruption in healthcare and science, a lot of the conversations go back to gene sequencing and what we can learn and how that just will open up the field of diagnosis and really treatment, it feels like, when it comes to the medical community. I mean, talk to us a little bit about that and why this is so important and why getting the cost down is so important.
Yeah, so I mean, one reason getting the cost down is so important is that, if you sequence one person's genome, first of all, like, we have hereditary genes, you know, that we inherit, but then our genome is constantly evolving. Like, think of cancer, that's, you know, the DNA like literally mutating. And so to be able to actually understand a lot of these things, you need to be able to look across large swaths of data. And so you need to be able to do it, you know, not just for 1, 2, 3 people at $100, but you need to be able to do it for maybe millions of people and over time. And then you need to be able to run big data analytics on all of that information. So at this point, that's not really possible. But there is this, I mean, with Ultima Genomics, the investors who backed this company and the the company itself. They believe that if they've gotten it to 100 and they can help bring that down lower, we will be able to evaluate and assess what people's data, just all the data at some point soon.
Michelle, going to throw you a little bit of a curveball here, okay? Because I'm thinking about the decliners that I'm doing in the close today, and I couldn't help but notice in your story that you write that the company that dominates this market right now is Illumina. It is down 7% today as we speak. And look, healthcare and biotech is down overall, but this is the worst performer on a percentage basis in the S&P 500. Is this because investors are worried about Ultima Genomics?
It could be. I mean, yeah, as you state, like this, Illumina is the big player in this market, and up until now, they haven't really had anyone competing with them in a great way, and so it could be investors just looking at the backers in this and looking at their track records, and then making an assumption that this will be bad for Illumina.
This startup, though, sounds like it's going to be a bit of a longer-term play, right? In terms of where genetic sequencing is going, just got about 30 seconds, Michelle, right? I mean, this is a company that, is it going to go public soon? And in terms of the payoff, what's another 10 years? Just quickly.
Yes, this is a thing. It's going to take a while. They've said that the $100 genome is just it's the beginning, not the end. And I know they have big plans, but it's not something that we're going to see a payoff from tomorrow or anything like that.
All right, are they going to go public soon? Really quickly?
You'll have to ask them. I know I asked them and they did not give me an answer, but
yeah, that's how it goes.
The markets, I'm sure.
You had to ask.
Yeah.
All right, Michelle Davis, thank you so much. Bloomberg News finance reporter joining us on the phone in New York City. This is Bloomberg Business Week. Carol Massar, Tim Stanovic. We are Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, this is Bloomberg Business Week. Carol Massar, Tim Stanovic, and coming up, we're going to talk about the miracle fuel known as hydrogen.
Or is it a miracle fuel?
Good question.
Is it as good for the environment and harmless as we thought?
Probably not.
Yeah, we're going to talk to David R. Baker about that, Energy Report. It's today's big take. It is a really good one. First, though, Doug Krisner, less than a half hour to go. What's going on?
Yeah, let's call it 28 minutes. I think we've been rattled a bit today in the equity market by the spike that we're seeing in U.S. Rates across the Treasury curve. The entire curve has higher, particularly at the long end. A 10-year now at 2.85%. So we're up nearly 12 basis points on the day. That's a huge move. At the shorter end, a 2-year at 2.53, gaining a little more than 6 basis points. But if you look at the equity market price action, there are 11 industry groups within the S&P 500. Only 3 are positive right now: consumer discretionary, communication services, and financials. Everything else is weak, including energy. There has been a lot of volatility today in the crude oil market. We had a rally fizzling earlier after the Wall Street Journal reported that OPEC members are exploring the idea of exempting Russia from an oil production target deal. That could open the door for kingdoms like Saudi Arabia, even some other producers, to pump more crude. WTI right now just above 115 the barrel. The Brent contract is off about 1% right now. We're at 116.40. Dow Industrial Average minus 0.2%. We've got the S&P 500 off about 0.1%, but the NASDAQ comp, given some information tech strength, is pushing higher by just 0.2%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug Krisner there. The Bloomberg Big Take today, it is also among the most read on the Bloomberg terminal. It is about the miracle fuel, hydrogen, but how it can actually make climate change worse, which made me say, what's going on?
David R. Baker wrote this story. David's energy reporter for Bloomberg News. David joins us this afternoon on the phone from San Francisco. David, we were told that hydrogen was sort of the magic bullet, the secret sauce here, the secret element, maybe I should say. When does it become harmful? And give us this in a way that, you know, people who perhaps felt alienated during chemistry sophomore year might really understand.
That's funny.
Yeah, talking with climate scientists on this one was quite an education, let me put it that way. It becomes harmful when it leaks into the atmosphere in bulk. And the issue isn't quite like carbon dioxide, where carbon dioxide traps heat in the air by itself. This is, in a way, a bit more subtle. Hydrogen, once it leaks into the atmosphere, sets off a series of reactions that each end up warming the atmosphere a little bit. And because it does this, it has this series of reactions, it actually has more global warming potential in the short term than carbon dioxide itself, about 33 times the potential if you're just looking over a 20-year horizon. So it's an effect that people have been aware of, a small group of people have been aware of for a long time, but it never really made much difference until now when we're talking about building a whole hydrogen economy.
Well, that's David, I was going to say the solution is just don't leak it. So, okay, I'm being very simplistic, but seriously though, is there a way around it, or do we just say X it out, hydrogen is not the solution?
Yeah, one of the things I found interesting reporting the story was that a lot of the scientists who are focusing on this and trying to get other people to focus on it actually don't oppose using hydrogen itself. And they don't want this to be a reason we don't pursue using hydrogen. Rather, they want us to build this new economy right from the start so that it doesn't become a problem in the end that we then have to go back and fix after the fact.
Didn't the nuclear industry probably set out with that same mission, and then
Well, the thing that's the closest parallel, and some of these scientists are the same people who worked on this before, but the closest parallel is probably natural gas, and are relying more on that and less on coal. And that big switch that we started making a couple of decades ago, it turns out there was a lot of methane that was leaking into the atmosphere, a lot more than anybody at the time really realized. And that's had a global warming impact itself. So these scientists are saying, look, we don't want a repeat of that situation. Let's build this system so it does not leak from the get-go.
Yeah, we've done some pretty remarkable reporting, David, as you and the team know, about those methane leaks using those special cameras that are able to capture that methane leaking from these areas, particularly in Texas. I do want to know, though, take us back further in thinking about hydrogen as a fuel. Where does it come from? How is it actually separated into something that can be used for energy?
There are a lot of different ways to produce hydrogen, a lot of different ways, and they're referred to on sort of a color wheel. Each route for making it has its own assigned color. So the ones you'll hear the most of are green hydrogen and blue hydrogen. Blue hydrogen is basically stripped out of natural gas using high heat and pressure, and that process does release carbon dioxide, but the carbon dioxide is captured, trapped, and stored. So that's what people are talking about when you hear the term blue hydrogen. The big competitor now that a lot of people pin their hopes on is green hydrogen, and that is split out of water using renewable power. And if you use that process, the whole process releases no greenhouse gases whatsoever. So that's what companies like Plug Power right now are focusing on, whereas a lot of the oil and gas industry is really interested in blue hydrogen because that uses one of their fuels as the base.
Yeah, right. Talking their book a little bit, I guess many would argue. But I mean, green hydrogen, does that have the potential, though, to meet global energy needs going forward at a time, David, as you know, that we're rethinking because of the war in Ukraine and Russia and increasingly cutting off Russia, really rethinking hard about how quickly we have to ramp up to renewables.
Yeah, there are people who are very into the idea of hydrogen who will just say, look, we need every possible kind of hydrogen right now to make this transition work. There are others who think that some of these ideas are going to fall by the wayside just by the power of the market. If you talk to Bloomberg New Energy Finance, they're quite convinced that blue hydrogen will not be able to compete on price against green hydrogen somewhere in the next 10 years. And if that's indeed the case, then you're just going to see the investments allocated where they make the most sense.
When people think about alternative fuels for vehicles, for example, I think they think oftentimes about electric vehicles. Perhaps they think about, well, that's it. But, like you mentioned Plug Power, and we've spoken to the CEO at that company a few times. That company known for the industrial side of things. How is hydrogen... How do hydrogen proponents hope that hydrogen is used when it comes to transportation and when it comes to energy?
There are some hydrogen proponents who really don't want it used for road transportation outside of long-haul trucking. They're really not into the idea of cars. They're not into the idea of having a fueling network for those cars, in part because of this leak issue. If you've got that kind of really vast distribution network that you see right now for natural gas, it's pretty hard to make sure that doesn't leak a fair amount somewhere along the way. That said, there are other kinds of transportation where hydrogen is one of the few options for going zero carbon, 20 or 30 years from now. You see a lot of excitement around shipping using this to fuel ocean transport. Right. There's some excitement around hydrogen planes, too.
And so David, net, the takeaway here, and just got about a minute or so here, is that it sounds like hydrogen to some extent needs to be a part of our alternative energy toolbox. But what your point is that we have an opportunity, I think there's a great quote, of building out this new infrastructure, but making sure we don't repeat those past harms, that we do it in the right way, in a safe way. And again, just got about 35 seconds.
Yeah, the scientists that I talked to for this story, that is the point that they really want to drive home. They want people who are planning for this future to take this risk into account and use it as one of the things that helps design the system of the future. So let's design it and build it the best way possible so we don't have to go back in the future and clean up another mess.
Yeah, it's fascinating. I love this. And I will say, my husband and I, every time
He's all into hydrogen.
He is. He's like, why aren't we doing hydrogen? Why aren't we doing hydrogen?
So you sent him the story.
I did this morning. I'm waiting for that at-home discussion tonight about it. David, thank you so much. Bloomberg News energy reporter David Baker, such an important part of the conversation, macro conversation we're having about energy in today's world. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenevec and Carol Masser. We're live in the Bloomberg Interactive Brokers studio in New York. Carol, over the weekend, I tried to put away my phone and not be on Twitter, and I did a pretty good job of it yesterday.
Can you tell why?
Well, because I was driving. Wait,
why
else?
There was a reason.
Because I had to use them as a baby monitor too. Yeah, we forgot the baby monitor for our day trip. So you can just use FaceTime, but it means you can't use your phone for anything else. It's fine. It was a good thing. I was with family,
I love it. Anyway.
So we, I did spend a little time on Saturday and Sunday, and there was a lot of discussion on crypto Twitter about the new Luna cryptocurrency. Mm-hmm. And let's bring everyone up to speed here. Muyao Shen writing about this today. Terra's new Luna token, it's taking holders on a wild ride just days after being distributed to investors who saw the value of their cryptocurrencies tied to the failed blockchain destroyed.
We talk about volatility. Well, check this out. Various trading platforms showing differing prices after the tokens were awarded on Saturday in what's referred to in the crypto industry as an airdrop. Kraken data showing that the price opened at around $17, swung between $30 and $4.80. Talk about a gap, a standard deviation, whatever you want to call it. OKX listed an opening price of $1 with extremes of $20 and $5. Luna 2.0, as a new token is known, was up about 30% to around $9 today. I haven't checked as of late, according to pricing data from TradingView and Kraken.
I checked a little earlier today, and it showed that on CoinGecko, which is another one you can use, it had been as high as $18 in the last few days. And it was down about $6. Right now, it's at $8.64. This, according to CoinGecko. But we do need to note that this is an average price from many different exchanges, and it's really difficult to get the data to find what the actual price is.
So, currency, commodity, gambling chip. What do you call it?
I don't know. Why? I also, you have to remember that a lot of the people who are getting this, they were burned by the first iteration of it too.
Exactly. And is it just a case we haven't gotten to an iteration where things start to settle down and it all makes sense? I'm still waiting. This is Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We have fewer than 13 minutes until the closing bell for the Tuesday session. Right now, the equity market is lower, not by much. This worry over persistent inflation is intensifying the debate over how quickly central banks can raise interest rates. And today, we're seeing a real spike in rates across the entire U.S. Treasury curve, particularly at the long end. We've got a 10-year now yielding 2.85%. We're up intraday by more than 11 basis points. Remember, tomorrow the Fed is set to begin shrinking the balance sheet, so we could see a little bit of anxiety today building about the possible knock-on effect. Yesterday, we heard from Fed Governor Chris Waller. He was saying models are suggesting the overall reduction in the balance sheet will equate to around a couple of 25 basis point rate hikes. Also today, President Biden meeting with Fed Chair Jay Powell in the Oval Office. Before the meeting got underway, the president said fighting price increases is his top priority, but he pretty much conceded that the primary purview of fighting inflation rests with the Fed. So we're seeing higher rates today strengthen the dollar quite a bit. The Bloomberg Dollar Spot Index is rising about 0.4%. If you look within the broader market right now, the S&P 500 is lower, yes. 3 of the 11 industry groups right now positive, but energy being very hard hit. The energy group is down about 1.7% right now. A lot of volatility in the oil patch today, with crude right now trading north of $115 the barrel. Dow Industrials weaker by 0.5%. S&P down 0.4. NASDAQ comp off 0.1%. I'm Doug Krisner. That is your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. It's 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
The White House deserves credit for getting at least 13 other countries, including trade skeptic India, to join in launching the Indo-Pacific Economic Framework this month. Members of the pact represent more than 2.5 billion people and roughly 40% of global GDP. But the deal is hardly a rethink of what trade policy can be in the 21st century, as U.S. Trade Representative Catherine Tai put it. It would be wiser to view it more modestly, as a small step forward for an administration that has so far all but ignored free trade. Ideally, it will be a prelude to the U.S. joining the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, or CPTPP. If nothing else, the new framework is a sign that the administration recognizes the importance of trade in the region. But it's just a beginning. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I'll turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
The question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everyone. We've got about 10 minutes left in today's trading session. Bouncing around. Yep, volatility is certainly the name of the game here in 2022. We are off our highs and lows of this session. What does it mean? On this last day of trading in May, the NASDAQ just up about 16 points. Dow down 76, as you heard from Doug, and the S&P just down about 7.5.
Jack Murphy is Co-Chief Investment Officer at Easterly Investment Partners. Jack joining us this afternoon on the phone from Beverly, Massachusetts. Jack, how are you?
How are you today? Good.
We're good. We're trying to make sense of kind of a wacky trade today. Is this all about end of the month rebalancing? Because, I don't know.
Well, I'd say this: there's a lot of noise all the time at the end of months, and there's been a lot of noise in the market the last few months overall. I'm not sure what people are focused on today. We kind of take a little bit of a longer-term view, and so day-to-day events really don't overly affect us. But
no, day-to-day might not, but what about year to date? I mean, if you think about the trend line, right? We were kidding at the top of our broadcast, Jack, about, sell and may go away. And I feel like, well, we've already been selling this year. So I do wonder, kind of what is the next trend? We're trying to figure out bottom in stocks. We're trying to figure out the top in rates. We're trying to figure out peak inflation. Like, there's just so many different questions. And yet, it doesn't feel like the financial crisis. It doesn't feel like necessarily 1999, 2000, 2001. How do you see this market environment and the opportunities or lack thereof?
Yes, I mean, we take a very company-specific, bottoms-up focus, and the companies we get on the phone, and we tend to focus on companies with pretty good balance sheets and pretty good competitive positions. And I think most companies think, business, while they can see things slowing down over the horizon, they haven't seen that yet. And most of the banks outside of mortgages haven't seen a lot of credit issues yet, but we suspect that might still come. In the industrial space, if you have sort of a long cycle business, and we focus on a lot of companies with longer cycle businesses, they feel really good about their cash flows or where their turnarounds are, or the opportunity if China reopens, and how much this Russian noise is noise to a lot of companies because it's not that big a component of most people's revenues.
You mentioned longer cyclical businesses. Those are the companies that are among those that you focus on. So give us a couple of either more specific sectors, or we would love some names. I know our investment audience would love names.
Yeah, one of the ones we've been involved in for a couple of years now is Invent, which was the company that spun out of Pantero a few years ago. And, they're really involved with electrifying grids and hardening grids and thermal protection in grids. And, their orders have been good. Their outlook's been good. I think the relative market shares are pretty strong.
What's the ticker on that? What's the ticker on that?
Yeah, NVT. So they're pricing to recover their raws. Their orders have been good. Their balance sheet's pretty good. They've done a lot of really smart M&A. And the valuation is still compelling. We value everything on free cash flow, and it still trades at a discount to most of the things in the industrial space. And I think they think business is great right now.
Yeah, down 6.5% this year. And it's about a $6 billion company. What's another one, Jack?
Luckily, our biggest position is Unilever.
Interesting moves today.
Yeah, interesting move today. So we've been involved in stocks where Trian is kind of stuck their nose in the past, and I think they proved to be an adult in the room in board discussions. I think Unilever probably has needed some of that over the last 4 or 5 years. It has not been a good stock for us year to date, and we were involved from last year. So obviously, we're getting a little bit of payback today, but it's been tough. But they are doing the right things. They are in emerging markets. They, with 2/3 of their business in emerging markets, they do buy back their stock. They do pay a really healthy dividend yield. The valuation is compelling. I think there's a lot of room for improvement here, and you're getting it at sort of this discount valuation. I think a lot of the people, a lot of people in Europe are probably saying, we could ignore this thing or we could be short this thing in the past, and maybe with some positive direction at the board level, you can't take that position any longer. So I think Unilever is a pretty good idea here.
It's interesting. I've talked with Alan Job, the CEO. Certainly, I did that during the pandemic, and it does feel like it's a company that is thinking about some of the things that consumers want, investors want in terms of sustainability and ESG initiatives to some extent. And I think, we'll have to see where it goes, as Tim mentioned. I mean, the ADR that trades in the U.S. is down about 10%, and we will ultimately see where it goes. What's another name that you like or that you hold? Unilever, you said, is your biggest position?
Yeah, luckily today, I guess. There's another, and I think our take is, look, growth stocks have come down a lot, but the valuations of growth stocks still trade above a 25-year trend, and value stocks have kind of done okay this year, but they're still below a 25-year trend. So we think this kind of rotation continues. But with that said, I do think you should take a less cyclical posture here, and we've got a bunch of stuff in consumer staples we like. Mm-hmm. One of those is a weird company called Seaboard. SEB is the ticker. This is sort of an agricultural conglomerate that's involved in, they have a big pork business. They have a big, they own a 50% joint venture in a turkey business. They do some shipping of commodities. They have a commodity milling and trading business. They just are about to start a plant that's going to make renewable biodiesel. So they do a lot of interesting things.
Yeah.
No one's ever heard of this company.
The volume is so low. 550 shares traded.
Yeah, it's a $4,200 stock though, so it's you're getting that in the stock price, right? And it's controlled by one family that hasn't proven to be overly shareholder friendly in the past. But I think if you do breakup value in the stock or normalize the margins for the different businesses, you can get a huge price target here relative to to this current stock price. We can value this thing as high as $13,000 or $14,000 a share, which would be a triple. You don't find many of those, I think, in the consumer staple space, and so we think this one's really, really interesting.
Pork, marine, sugar, and alcohol commodity trading, which is why you understand they're playing a lot. Revenues coming out of the Caribbean, Central and South America. A fascinating play. Makes me kind of want to get their CEO on and talk a little bit more about what they are doing. Hey, Jack, thanks for talking names with us and also giving some of your macro. But I love when we can dig and drill down deeper. As you said, bottoms up. They're looking at these companies. Jack Murphy, portfolio manager, co-chief investment officer at Easterly Investment Partners. They've got some $2.7 billion in assets under management. Joining us on the phone from Beverly, Massachusetts. All right, folks, it is time to head over to our Bloomberg TV team for Beyond the Bell. We are live on Bloomberg Radio, Bloomberg TV, and YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Katie Greifeld in for Taylor Riggs. We're counting you down to these closing bells here on this Tuesday afternoon, here to help take us beyond the bell. It's our global simulcast, joined by Carol Massar and Tim Stenovic. We welcome our audiences across Bloomberg Television, Bloomberg Radio, and on YouTube. And Carol, a relatively, I guess, limp end here to the month of May here with the S&P that actually had been clinging to some gains now, kind of falling flat here for the month.
We kidded earlier about sell in May, go away. It's just like May, just go away, like we're done. And we're curious about.
Refuse.
You refuse.
There are too many good birthdays in May.
That's true, my brother. No, but it is interesting, and I do think until we get through all the Fed actions and we get to see how that all settles in, we'll get a better idea on the economy. We'll figure out kind of what's the next, Tim, leg when it comes to market direction.
Yeah, speaking of direction, the S&P 500 really searching for direction today, moving between gains and losses more than a dozen times. At its lows, it was down as much as 1.3%.
And volume's still pretty light.
Yeah.
I mean, all of this.
Holidays?
Down 3.8%. I hope everyone's having a wonderful long weekend, but it does feel like there was a muted action returning to the desk today.
I do just want to point out, we talked a lot about the decoupling between tech and crypto on Friday. A little bit of continuation of that today. Bitcoin still up 1.2%.
Yeah, and look, I mean, still up on 1.2%, but where was that real embrace of risk assets, at least the way that we saw it last year and the year before, and et cetera, et cetera? It just seems like, at least for now, no one's really willing to jump in the pool whole hog, just not yet, right?
No one buying the dip. Maybe a little.
Well, there are your closing bells here on this May 31st, 2022. This is, of course, a holiday-shortened week in the U.S. in observance of Monday's Memorial Day here. The Dow Jones Industrial Average going to finish the day down about 0.6%, though it is clinging to basically what is an incredibly modest gain on a month-to-date basis of less than 0.1%. The S&P 500 higher by about 0.6% on the day, and for the month, it's basically just call it unchanged here. It had been a little bit higher in the green on a month-to-date basis, but the NASDAQ decidedly lower here on the day and on the month, 0.4% on the day. The NASDAQ Composite down about 2% on the month. The NASDAQ 100 down about 1.7%. And a quick look at the Russell 2000, which is going to finish the day lower here, though it did manage to eke out a modest gain of about 4 to 0.5% on a monthly basis. Carol.
Yeah, I was looking at that too, the Russell versus the S&P for month over month, and you're right, the small caps certainly beating the large caps for the month of May. Katie, do you want to guess what was the best performing major industry group in the S&P 500 for the month overall?
I would love if you told me.
Energy.
Energy.
It's got to be energy.
I feel like your answer, right? Like last year, this year, it's all about energy. It continues to be that trade.
It's actually so funny that you say that, Carol, because if you look what underperformed today, it was energy way down at the bottom, that sector losing 1.8% sort of as crude fluctuated. If you look at the winners, though, to keep it positive, you did have consumer durables, retailers making a break for it. Under Armour, in particular, did well. You also saw banks get a little bit of love, about a 0.3% gain there. Again, as you saw yields finally start to rise a little bit. Bonds had been rallying. But again, you had energy at the bottom, Carol. Materials as well, not doing too well.
All right, well, good to know. So let's get to some of the specific gainers in today's session. And just pulling it up on the Bloomberg terminal. There were a lot of Chinese companies. I mentioned the NASDAQ Golden Dragon Index was an outperformer in today's market trade. And some of the individual names, JD.com, Alibaba, among those in the NASDAQ 100 that were really outperforming. JD.com, we've got it up on for our TV guys, for our radio guys. It's up about 4.5% here at the close. Easing of some of those lockdown measures in China, and also some better than expected economic news out of China, giving some optimism. But keep in mind that if you look at those Chinese stocks overall, still under pressure this year. Want to mention Estee Lauder. This stock rallying up about 1%, up more than 4% at its highs, but settling just with about a 1% gain. Regaining its top pick status over at Oppenheimer following improvements in China's COVID-19 situation. So you do continue to hear that story. That stock's still down, though, more than 30% so far this year. And Mosaic, this was your top in the S&P 500 today. Fertilizer company. We know that. Piper Sandler maintaining overweight, raising the price target to 85 from 80 a share. Of that stock closing at 62 and change. Stock is up more than 60% so far this year. And I don't know if you noticed, but Amazon was also top in the S&P 500, up 4.5% today.
Yeah, it was a big move and fourth straight day of gains for that
Interesting.
company. Yeah.
Well, let's look at the decliners. Interestingly enough, Illumina, the worst performer in the S&P 500 today. Now, we should note healthcare did underperform, but I also want to point out that today's also the day that Ultima Genomics exited stealth mode. This is a company, it's venture-backed, it's developing a way to sequence genes for faster, cheaper, and at a bigger scale. They've been working on this for 5 years. There's a great Bloomberg write-up about this. They say they can do this for $100. It's backed by Andreessen Horowitz, Lightspeed, Founders Fund, and more. The space right now is absolutely dominated by Illumina. So just worth pointing out on a day where Illumina is down about 7%. Snap is finishing the day lower by 9.5%. Vertical Group downgraded Snap from buy to negative. Credit Suisse also lowered its price target to $59 from $77. Snap shares down more than 50% just in the month of May. And here's one that I haven't talked about yet today. This is a fun one. Goldfields Limited, down 23%.
Yeah.
They've agreed to buy Canada's Yamana Gold for about $7 billion in an all-share deal. What's that?
You got that right.
Yeah, South African miner.
I hosted our Bloomberg Canadian show today, by the way, filling in.
Oh, so and it is a Canadian company. Look at that. You know, I had to call them to make sure I got the pronunciation right.
Yeah.
It's going to cost me a Toronto call.
Did you?
Yeah, that's long
You
distance.
did?
Yeah, how many nickels did you have to put into the...
I'll find out in a month.
On Bloomberg's dime, potentially. Meanwhile, I mean, you go from gold fields over to the world of commodities, and actually, gold was getting a little bit of focus today as we see once again the Federal Reserve focusing in on inflation. In fact, we saw a strong dollar as well. But I want to look across the commodity spectrum because the real story of commodities was the flip-flopping that happened over in oil. We saw Brent crude now down by 1.4%. 115 is where we trade. Now, we had seen previously Brent at about $124 on the barrel. So we saw it pushing on higher as we worried about inflation. We worried, of course, about what finally Europe actually taking some of the toughest action yet seen on Russia in terms of deciding that they would bar some Russian oil imports. However, we then completely flipped reversed after a report coming out of the Wall Street Journal talking about potentially Russia being sort of moved out of OPEC to a certain degree. This is all very much early reporting, but could there be some sort of element that other OPEC members start to fill the gap in terms of production as Russia's stymied further and further in terms of its sanctions? We see, therefore, oil suddenly pull back from its previous gains, certainly on the Brent contract. We saw WTI basically finish flat. Natural gas was actually off by more than 5%. And we had seen a lot of exuberance around China, of course, the focus of a reopening, potentially coming back after the very torrid curbs that we've seen in terms of COVID. But we did overall see some hope coming from commodities into the FX market. The US dollar index actually up 0.4% there. That, as we see once again, focus from the Federal Reserve, Jerome Powell in a meeting with President Biden, therefore tackling inflation. Also, US Treasuries fed into that. But overall, it was a story of the euro going lower by 0.4%. Everyone worrying about the British pound, from existential crises to a certain extent. Bank of America talking about that. And I look at sovereign bonds, the UK gilt actually, yields pushing up about 14 basis points there. But overall, it was a story of yields going higher globally, Katie.
Going higher globally, going higher across the curve on U.S. Treasuries. You saw a sell-off across all maturities. 10-year yields in particular caught my eye. Those that maturity up 12 basis points. Really, money just getting pulled out of bonds today.
All right, we are still, believe it or not, still in earnings season. Salesforce reporting right now. Shares been all over the map here. It looks like their first quarter numbers did beat, at least on some of the main metrics. Sales overall, $1.63 billion in the quarter. Subscription and support revenue coming in at about a 24% jump in that quarter. We should also point out that a key measure, that the revenue that they look at with regards to those contract obligations did come in slightly above estimates here. But here's their forecast here. They're providing a slightly narrower range for their full year revenue of about $31.7 billion to $31.8 billion. That's a little bit lighter than the $32 billion that they had projected before. Similar story here with some of their EPS numbers. They are maintaining their second quarter remaining performance obligation, which is going to be down about negative 15%.
Well, talk about bouncing around here in the after hours. We did see some selling initially, but now the stock's up about 3.5% here. It's been on a downward move and trajectory here in 2022, down about 37%. But this is interesting because we constantly talk to CEOs and heads of institutions, and they're saying, the tech spend, it's still there, but maybe, initially having to adjust some of their numbers in terms of the outlook. The commentary on that call will be important here, Tim.
Yeah, we're getting a little preview of it. Mark Benioff, the co-CEO of Salesforce, saying, quote, while delivering incredible growth at scale, we're committed to consistent margin expansion and cash flow growth as part of our long-term plan to drive both top and bottom line performance. Once again, co-CEO of Salesforce, Mark Benioff, in a statement.
And let's just talk a little bit of idiosyncratic news, one that people care about from a trading perspective. Meta, of course, the artist formerly known as Facebook, is finally managing to change its FB ticker to META. It's all going to happen on June the 9th, of course. So adopting the new ticker after the name change came last October.
And this has been in the works since January. This ticker had been owned by an ETF, a metaverse ETF, issued by Roundhill. They gave up that ticker. Facebook, Meta, finally has it.
So when do we get to stop saying Meta, formerly known as Facebook?
When do we get to find out how much
Is that
Meta?
November, December?
I still just want to find out how much Facebook, Meta Platforms paid Roundhill
I care very deeply about
this ticker.
That. I would love to get you that answer.
We
keep working
that
on
contract. All right, guys, we got to run. That'll do it. Wrapping up the month of May, unbelievably here in 2022. We will see you again on radio, on TV, and on YouTube. We call it Beyond the Bell, but we'll catch us same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, God bless you or cough you. I don't know for Romaine.
I'm just still thinking we finally seeing Meta Platforms, right?
What?
Now they finally have Meta as the ticker.
But right, so we've gone like Facebook, formerly known as Meta, formerly known as Facebook. Now it's Meta, formerly known as Facebook.
Kraft.
I love that one. That's the one I'm like, the focus group. I say this all the time.
Which, Altria or Meta?
Altria.
Yeah, I mean, that's what I think of still.
Mondelez.
Yeah, exactly.
Right? It's like, okay, guys, we just spent you like $1 million, and here's the focus group, and here's what we came up with. It's like drug names. Like, who does this? Who does this?
What if your job was just coming up with potential names for
But ridiculous names, and I'm really sorry, Mondelez and other places, but it's like, Meta I kind of get.
Yeah, look, they're going all in on the metaverse. And
Apple Computer, Apple. Like, I get that. Right?
Yeah. Well, no longer Apple Computer, Carol, just Apple.
But that's what I'm saying.
Yeah.
Like, I get that. Do they need a face? Well, they probably didn't do a focus group.
Rebranded too, calling themselves an energy company more so than a car company a few years ago.
They?
Yeah.
I forgot about
that. But that's a different kind of change. I mean, Facebook going from Facebook to Meta Platforms is a huge change. I think it's even bigger than a Google Alphabet type of thing that we saw, in 2015, 2016.
Right, that was a big thing. And that was a hard one to
I still
get
call
around.
it Google. That's still a tough one.
By the way, shares of, Salesforce, ticker CRM, they're up about 5.3% following their latest earnings, up actually almost 6% here. They did give an updated outlook, and that's certainly what investors are focusing on. It does seem like, what did they say? Second quarter, current remaining performance obligation down 15%. Fiscal year adjusted EPS 474 to 476. That was increased. They had seen 462 to 464.
You heard me make the comments that Mark Benioff said in his statement. There's some more that I want to get to real quick. Amy Weaver, the president and CFO at Salesforce, saying that we've been able to deliver strong growth while also driving disciplined decision-making, enabling us to expand our operating margin guidance for the full year. Disciplined. Interesting word there.
They did rein in their revenue numbers, so that's top line. You're listening to Bloomberg Business Week. This is Bloomberg Radio. All right, you're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. So we did talk about this before, about what Don Fitzpatrick, Soros Fund Management CEO and CIO, had to tell the host of Bloomberg Wealth, David Rubenstein, also the co-founder of Carlyle Group, earlier. They did have this conversation back at the end of April, so just a little caveat, full transparency. But she did say the markets are wrong when it comes to a recession timing.
Yeah, here's what she said. The U.S. consumer is in extraordinarily good shape, and that's going to help the economy weather the Federal Reserve's expected rate hikes. Wage growth is not keeping up with inflation, though Americans are still flush with enough cash to pay down their credit card balances. We should note, once again, this interview was a month ago, and certainly there have been some changes in terms of gas prices have continued to move higher. But I don't think the story is that much different within the last month.
No, and we certainly have seen it. Some CEOs of some of the retailers, we talked about Macy's CEO Jeff Gannett saying that he isn't seeing signs of bad debt. Consumers are spending, although it's something that certainly he's keeping a watch and doesn't necessarily expect that to continue going forward. What Dawn said specifically, markets are cyclical, and so it's a matter of when we get a recession.
Yeah.
So that's what she's saying, that she isn't worried about a recession in the immediate future. And I would argue, right, we are cyclical. We do see ups and downs. To me, what's going to be key is how deep a recession we get. We got a recession during the pandemic, right? Or we had economic, right?
Oh, we did have a recession.
We did have a recession.
Yeah. It was short and sweet, though. I don't want to say sweet. It was short.
Right. We quickly bounced back. But this is the erratic nature that we've seen of our economy. So what is the true essence of economic growth once we get on the other side of it? So to me, what's going to be key is how deep it is and how long it goes on.
Yeah, Carol, we talked a lot about her recession comments and what she said about the consumer. Here's something interesting that we haven't gotten to talk about this afternoon yet.
What?
She said she thinks that the Fed is going to rush to get rates up to 2% to 2.5%, and that she thinks that they're going to see 3 50 basis point rate increases.
Okay, so yeah. I mean, all right, so we'll see what happens.
50 basis points at the next 3 meetings already priced in.
This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The equity market was down on the final trading day of the month of May. Volatility really defined today's price action, and the primary driver was the spike in rates across the U.S. Treasury yield curve. The 10-year jumped more than 12 basis points today. We were last quoted in New York just under 2.86%. Tomorrow, the Fed is set to begin shrinking the balance sheet, so today there may have been a little bit of concern about the possible ripple effects. Now, we know that persistently high inflation is with us. One of the reasons that we saw a big drop in consumer confidence in the month of May, it was down to the lowest level since February. High inflation is certainly one of the factors pressuring corporate profit margins. And today, Gina Martin-Adams, the chief equity strategist for Bloomberg Intelligence, was saying margins are likely to get worse before they get better as companies pay higher wages and spend more for materials. After the bell, we heard from Salesforce. The company reported subscriptions and support revenue pretty much in line with what the market was expecting for Q1. The stock right now is up by more than 6% in the late U.S. session. At the end of the day, the Dow was down 0.7%. We had the S&P 500 weakening by a little more than 0.6%. NASDAQ comp today down 0.4%. I'm Doug Krisner. That is your Bloomberg Business Flash.
All right, Doug, thank you. Well, we mentioned that we had a focus today on health and life sciences, a lot of money going into that area. We mentioned also earlier from the World Economic Forum, up to 80% of providers in the U.S. are planning to invest in technologies, including digital health, AI, machine learning, as well as tools to support clinical staff and caregivers over the next 5 years. Our next guest involved in this deal space.
We're talking to Yusuf Saban, managing partner at Acuity, joining us from London. Yusuf, how are you?
Good. How are you?
We're doing pretty well, thanks. We've really got a great healthcare theme with today's show, understanding biotech, especially investments in the space. We've reported a lot in recent weeks, and big thank you to our team in Silicon Valley, about the belt tightening that we're seeing at startups. Even major tech companies like Meta Platforms and PayPal and Twitter either announcing layoffs, freezing hirings, or in Twitter's case, rescinding offers. What are you seeing from your position?
We get asked a lot if this downturn is different than previous ones, and we believe it is. But so were all other previous ones. And the key is to focus what led to the recession right before it happened. There have been 3 recessions in the last 40 years since 1980, and more than double that number before 1980. Only one lasted over a year. That was 13 years ago in 2008. And that was the only one that was remotely comparable to the current pullback with respect to the VC industry. And since then, things have evolved materially. Banks have stronger liquidity. LPs have higher dry powder, and the evolution of technology is much faster than it was. So we personally believe that there will be a faster course correction, and healthcare is fairly uncorrelated to the markets as far as patient sickness. So we should see a more rapid recovery in the coming months.
Is the space different than other traditional venture capital spaces because life sciences, and Carol and I talked a lot about this, the resilience of life sciences, especially in the context of real estate, Carol, because we've seen a lot of investment in real estate around the country when it comes to life sciences, because it's one area where that perhaps, that advocates would say is recession proof. But Yusuf, do you see it differently than other areas where venture capitalists do invest?
We do indeed, and as far as your point on real estate, it is incredibly tough today to find lab space for some of the portfolio companies that we're looking at, especially in the Boston area where most of them are based. Lab space is getting increasingly expensive to get, increasingly scarce, and they have to get significantly out of Boston to be able to find lab space. So yes, we see quite a few issues with real estate, but looking at the broader VC industry, in the first quarter of 2022, $10.4 billion was invested in global tech startups, which is off 36% from the previous quarter, where we had a little over $16 billion invested. And we saw huge health tech deals that saw their valuation halved quarter over quarter, and the Q1 22 mega round fundraising tally for healthcare was much smaller than any single quarter going back to Q2 2020. So as far as healthcare, we believe that mental health and telehealth segments will continue to generate strong demand and investor interest, but also as a defensive sector, pioneering therapeutics will rebound faster given the uncorrelated relationship between sickness and market sentiments.
So, it's interesting. When I was looking at your website earlier on today in prep for our interview, you guys talk about new science and voids in the new science and tech space. What are the voids in new science and tech space? You just talked a little bit about it, because I sometimes think when we're talking about disruption, innovation in healthcare and science in the science space, we're thinking like metaverses in the medical community. As we talked earlier,
it's metaverse.
Sorry,
please.
But when we talked earlier with the head, the CEO of Color, right?
Yeah.
This is about shots and vaccines and just something that sounds so basic, but that's innovation and disruption. If you think about making sure it's all accessible. So how do you think about new science and the voids in new science and where you want to put your investment dollars?
So for us, as far as we're concerned, unless we see that technology is truly disruptive, we believe that commercialization will continue to be challenging. And we will see significantly reduced interest rate into Me Too technologies, which is an area that we try to actively avoid. We look at healthcare from a much broader perspective than a pure life sciences fund. We're focused on 5 subsectors, which are biopharma, devices and diagnostics, digital health, sensors and wearables, and consumer health. And so we look at healthcare not just as a way to try and find the latest biotech firm that will develop the latest FDA-approved drug, but more as a way to keep healthy people healthy, to improve healthcare access, to lower the cost of healthcare. And so those white spaces that you see on our website is something that we actively look for to try and improve outcomes. And for instance, I'll give you the example of one of our portfolio companies, which is a Boston-based company called...
We just got about 30 seconds. Go ahead. Yeah, please.
Yes, which is a company that has developed a new process, new design, and new pathway to reduce the cost of biologics manufacturing by over 90%. Mm-hmm. And so this is going to change the game as far as disrupting a $300 billion industry that's dominated by the same 4 companies, and that's been the case for the last 40 years. Those are the kind of white spaces that we look to fill.
You talk to a lot of Americans who are paying for the cost of drugs, and they would argue that is one area that has not been disrupted really and could use it. Really fascinating. Look forward to catching up with you again. Youssef Saban, Managing Partner of Acuity, joining us on the phone in London. You are listening to Bloomberg Business Week. Carol Master, Jim Stanovic. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Profit versus purpose.
Or how about a little bit of both?
Wouldn't that be
Do they have
sweet?
to work? Do they have to work against one another?
I would argue no.
$1 million bucks a year, your choice. Where does it go?
I love that. That's a column by Brooke Sutherland. We're going to get into that in just a moment. First up, though, let's get back to your top business stories. A look at that market close on this Tuesday. Here is Doug Krisner.
Hey, Carol, I'll get to some of the news after the bell in the moment. We were generally lower today across the board. In fact, of the 11 industry groups within the S&P 500, only 3 were positive. A lot of the price action was driven today by a move up in rates across the entire U.S. Treasury curve. A 10-year up by more than 11 basis points. We were last quoted in New York at 2.84%, a 2-year at 2.55. We know that the Fed is going to begin shrinking the balance sheet tomorrow. Yesterday, we heard from Fed Governor Chris Waller. He was saying the models suggest overall balance sheet reduction will equate to around a couple of 25 basis point rate hikes. He was also talking about the fact that 50 basis point rate hikes need to be on the table for the next several Fed meetings. So that has kind of reduced what the market was hoping for, that we would see a couple of 50 basis point moves and maybe a little bit of a pause. That seemed to dissipate today, that line of thinking. After the bell, HP Inc. narrowed its adjusted EPS forecast for the full year. Those shares right now trading essentially flat in the extended U.S. session. We also heard from Salesforce after the bell. The company reported subscription and support revenue was pretty much in line with estimates for Q1. Those shares higher by more than 6% right now in late trading. Dow Industrial Average today down 0.7%. We had the S&P falling 0.6%. NASDAQ comp off 0.4% today. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. Well, this story is among our most read today on the Bloomberg about how the iconic private equity firm KKR wins by treating workers more like owners. Oh, my God.
Yeah, it's really cool stuff. Brooke Sutherland is deals and industrials columnist for Bloomberg Opinion. She's with us in the Bloomberg Interactive Broker Studio right now. So, Brooke, I just want to pose this question to Carol. $1 million a year to invest in a better workplace. Who's doing it and why?
Sure. So this was a policy that KKR rolled out at a company called CHI Overhead Doors. They make garage doors, but also, the doors that go into sort of the Amazon warehouses of the world. And they said, you know what, we're going to give you $1 million annually. So it's an annual budget. We don't want you to buy a piece of equipment. We want you to think about what would make your day-to-day better. And so the first year they chose to put air conditioning in the facility. This is in central Illinois. It gets very hot. So as you can imagine, that definitely made a difference in the day-to-day. The next year, they said, you know what? We really want to think about putting in better break rooms because, we go out and we take our breaks, but then we're outside and it's very hot as well. And so we want to take advantage of this air conditioning facility. They also put in a on-site health clinic just for, sort of quick checkup type things. You don't have to take as much time out of your work day. Yeah, you made the point in your piece that it's a 45-minute drive from this rural area to go to a doctor's appointment. For some people, yes. And so that can really make a material difference. And, if you think about long-term health as well, to do some of these proactive measures at your workplace can be hugely beneficial. So this is not, we're not talking about billions of dollars here. It's a, $1 million annual budget in this case, but it made a real difference. And it also made these workers feel like they were more involved in their jobs. And this is sort of a spin-off policy of a passion project at KKR of giving equity to rank-and-file workers, including hourly employees. And so that's really sort of the crux of their idea here is how do we treat treat workers like owners, and make them more invested in the company's success.
I'm sorry, Carol. I know you want to jump in, but we're talking about KKR here. I mean, wasn't there a book called Barbarians at the Gate that was written about KKR?
Yeah. So, it is unusual to see this coming from private equity, but
years ago.
They've really been the leaders on this front. KKR in particular, I mean, they're now doing this at 25 companies and counting, and that includes, Ingersoll Rand, which is a big public company, as they were involved in setting up this policy there, and then, that sort of continued even after they sold out. But they also, Pete Stavros is sort of the, genesis behind this, and he started a nonprofit and brought in a bunch of other private equity partners who have committed to rolling this out at some of their portfolio companies. So, private equity does not always have the best reputation, but they really are leading the way on this front. And I think it helps that there is, concentrated decision making. Especially it's easier to make some of these changes at private companies. And also, I think they're conscious of that reputation, especially in today's world, and all the focus on ESG and some of the.
I'm raising my hand for those on radio. No, so what I'm thinking though, Brooke, is it's so that they can say at the end of the year, because these private equity firms, these big guys are publicly traded. Look at all this good that we did. Like we are thinking about this, or is it because one, they can help out a workforce or help out a team? There's also a payoff in terms of either making them productive, happier. We talk about firms that provide food so that you don't go out and you just keep working.
No.
So tell me, is there a payoff, a financial payoff?
I think
or happiness payoff?
I mean, this is still private equity we're talking about, and there is a payoff. And I think KKR has shown that again and again, that, when they make workers owners, they get better returns. And you see, operational improvements. You see these businesses go on to do incredibly well. CHI, I think,
it's like a newfangled ESOP, right? Employee stock ownership.
Exactly.
But instead
it's similar. There's some differences between that, but it's a similar idea. And KKR got, I think, a 10 times return on their CHI investment, which is incredible for buyouts. And so, this is not just good for the workers, it's also good for the private equity firms in terms of the payoff. But I think, there really is also sort of a, greater good push behind this.
Yeah.
They are thinking about how do we address some of these issues of income inequality, and equity can make a real difference in terms of generating wealth.
Tim is so right. First of all, the panel he hosted was incredible. And so much of the conversations that we dealt with at Milken was about private capital and how they can really move the needle on ESG. But you mentioned Ingersoll Rand. I do wonder, what is the luxury? We work in a privately held company, and I have also worked in a publicly held company. And you see the differences of the luxury of being private and being able to push good initiatives. Is it so easily, though, to do in the public markets where we're saying, well, where did you make your earnings? Did you do this?
I don't think it's impossible. And we did see Harley Davidson, which is another publicly traded company, come out and say, we're going to do this. And they distributed equity to, I think, 4,500 employees using KKR as inspiration, what happened at Ingersoll Rand. So it can be done.
Yeah.
I do think, look, it's not as easy as just walking in and handing a bunch of stock out to employees. And I think KKR would be the first to tell you that it requires a lot of paperwork. It requires a rethinking of how you train your employees, because you want them to think through, okay, if I make this productivity improvement, what does that do? How does that help the company's stock go up at the end of the day? So it's a different thought process. They also do a lot of personal finance education to help them think through, what you do with this equity when it does eventually pay out.
Sorry, I'm laughing because if you could see on YouTube,
we're
and
fighting to get the next question.
We are fighting.
We got a little bit
but Tim is
I'll
watching.
Come back, too. You want to talk about this more?
Tim is like watching a tennis match. It's really kind of funny because he's going between
I'm stuck in the middle here.
Me and Brooke. But Brooke, is this pre-pandemic that they were doing this? Because I'm thinking it's such a tight labor force that companies are taking extraordinary measures to keep their workers happy right now.
Which is, I think, what is so striking to me is because this is not the first time KKR has done this. They have been doing this for a while, and they've proven their success. And I am continually struck by the question of why are more companies not doing this? And especially because of the pandemic, and you talk about all these labor shortages, and manufacturing in particular has long had a labor shortage problem that predated the pandemic. They have an aging workforce. It's not generally considered the most attractive place to end up as for sort of an up-and-coming young individual. They should be thinking out of the box. And I'm repeatedly struck by companies that don't go down this path, which is why I thought this idea of the $1 million annual budget, or whatever it might be as a percentage of your EBITDA each year, to give to workers. And it's sort of an easy first step. If you're not willing to go all in on equity, which you should be, but if you're not, then this is an easy way to sort of think through about how to make workers feel more invested, make them feel like owners in their company.
Brooke, only 30 seconds left, but I do wonder about the appetite for publicly traded companies to do something like this. You mentioned Harley-Davidson, that's one, but do you think we'll start to see similar moves from other publicly held companies because they don't have the same leeway to do this?
I think it takes time. I think the more examples you have like CHI, where the payouts that employees got from this equity ownership were substantial. The average was $175,000. Some people got up to $800,000 pre-taxes. I mean, these are life-changing amounts of money. And also, the company made significant operational improvements. They sold it for a very high valuation. So the more examples you have like that, I think the easier it gets to say, if you're a public company CEO or board, hey, maybe this is something we should look at.
Brooke Sutherland, leveraging your columns, deals and industrials columnist at Bloomberg Opinion, here in our studio.
It's Bloomberg Business Week. Tim Stenivek and Carol Massar.
See, we could have just kept her.
Bloomberg. We could have kept her.
Could have just kept you. Can go, but it's okay. We would have kept
Brooke's
you.
got like other work to do. We can't do a 20-minute interview.
Her columns, though, are must read.
Sutherland.
They're very thoughtful. They're very specific. She understands this space so well.
Brooke, have you seen Top Gun?
Have you seen Top Gun? Wait, you got to put the mic on.
Sorry.
Have you seen Top Gun?
Want to see it? Should I? Is it?
We haven't seen it yet.
We haven't seen it yet.
We're going to be speaking with Kelly Gilblom in just a second. She's in LA, and she's seen it twice already.
Do you want to know? Okay, can we reveal like your personal stuff?
Sure.
Okay, so Brooke is pregnant.
I didn't know this.
She's going to have a baby over the summer.
On the air.
We're going to keep you for a second, but I have to tell you,
We're going rogue here.
The last weekend before I went out on maternity leave, okay, I went and had a pedicure. I got my nails done, and then my husband and I went to a movie because we knew our life was going to be upended. So I'm just like, if you've got a little checklist.
In the best way ever.
Oh,
upended
no.
In the best way ever.
Totally. But I'm just saying, like, it was really kind of funny, like my little checklist before, like, my life was going to be, changed forever.
So my husband has seen Top Gun without me. So
Did he?
Yes, I know.
No.
Yeah, I should definitely give him a hard time about that. But I'm going to have to go by myself.
Well, it's really, I mean, it's just the things that, you have to think about. And Top Gun apparently did really well. And there's some interesting nuances to the movie. And we're going to get into that in a little bit. All right, now we can let you go. But anyway, we love you. We know we'll talk to you again soon.
That voice was Brooke Sutherland, Deals and Industrials columnist. Check out her most recent story, KKR Wins by Treating Workers More Like Owners. A really good read on the Bloomberg terminal.
So we are going to talk a little bit more about Top Gun in just a moment. There's an interesting story in the our Bloomberg News team, putting it out that Tom Cruise isn't simply taking out what appears to be Russian-made fighter jets in his update to the 1986 classic Top Gun. He's also angering China.
Yeah, the sequel Top Gun Maverick features Cruise's character wearing a bomber jacket with the Taiwanese flag, something considered an independence symbol by authorities in Beijing, who view the islands as part of its territory. The government asserts that Taiwan is already a de facto independent nation in need of wider international recognition. There was a lot of confusion about this because in the preview, it appeared that he did not have it on his jacket.
Right now, if you're watching on YouTube, you can see it. We're going to talk more about this in just a moment. Don't go anywhere. This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It was a down day for the U.S. equity market, largely because of a spike in interest rates across the entire Treasury curve, particularly at the long end. The yield on the 10-year was up more than 10 basis points today to 2.84%. Then after the bell, we had some news first from HP Inc. The company narrowed its adjusted EPS forecast for the full